Welcome to the advanced section of this course, where I will be teaching you in the smart money concept, or the institutional trading style, as you guys know it as. But in this short video, I just want to give you guys a snaps of why smart money concept is better than retail trading. Where you guys learned about support and resistance, trend lines, right? So for me, the best thing about smart money trading is really understanding the movement of money in the market and getting those precision entries, right? So the reason why it's better to trade money concept is because retail trading is more probabilistic than facts. So it's basically you saying, I hope the market will turn here, I hope the market will turn here, or I hope the market will turn here. So it's not a sure thing. You guys just basically trading off the pass. So this was a support in the past, and you're expected to act as a resistance in the future or something like that. It's not always the case, right? So it's basically you hoping that it's going to be the case this time. And most of the time when these actually do play, it's because there is a smart money concept lying around within that same area. Because I can see an order block right here, which means that there are unaccounted orders left right here, right? So what I am saying is that, if this auto block or if there was unaccounted orders left all the way up here, then the market would literally go through this resistance retest, and then push back down. So you guys would have gotten stopped out right here. But luckily this auto block is here. So it seems like the support and resistance are working. But nevertheless, let's look at some examples of why smart money trading is better than trading. Retail support and resistance and market patterns. Look at this right here. We had a double bottom right here. So technically if you're a retail trader, this would be a reversal pattern, right? When trading a reversal patterns, you would basically wait for the market to break this resistance, right? Break this resistance and then you get a retest. So it's something like this support resistant, broken turn support, right, and into the future. But the market left unaccounted autos here, because this momentum move right here, that broke structure. That was some money that fueled the market to actually break this structure. So there is an accounted order left right here, after the money has been transferred. You guys won't understand all these terms right now, but it's just me explaining to you why a smart money strategy is better. So as a smart money traders, we would have waited for the market to actually come back here, to collect these orders and then push to the upside. So a retail trader would probably catch this trade, but they would have to be risking more, right? So the risk reward is one reason why it's always better to trade this way. Because if you entered here, then your stop loss would be below the structure right here. And that is like a 20 pip stop, right? If you were to extend it here to the previous structure, the previous high, that is a 1:3, right? A 65 pips getting a 1:3. Smart money traders, however, would be taking engines here, right? Stop loss below is this auto block right here. And we'd be getting like 1:14. So a 1:14 compared to a 1:3 within same distance. Same trade, same everything. But the risk reward is greater. The next thing is that trend lines. So you're trading based on a trend line. The market came down, the market is structured right here. What do? You take a buy because the trend line is broken? No, right? Once the market is still creating lower highs. You're still in a downtrend even though the trend line is broken. Right? As a smart money trader, I see this. I see the market broke structure aggressively. So I see this break of structure right here. A retail trader see this break of trend line. I see this break of structure and see the market pushing up, correctively? Meaning that the momentum is not to the upside. The momentum is still to the downside. However, we need to correct ourselves. We need to correct this movement and account for all of those others, before continuing pushing down. And note, even though the trend line is broken, we are still creating lower highs. So we are still in a downtrend and there is an unfilled gap, right? Here that I would take my entry base off, so there's an on-fill gap right here. So that would be my entry 50%. I think this right here could be less than 2 pip stops loss, or maybe 2 pip stop loss. So 50% of this and extend it above 2.7 pip stop loss, and then target wherever we get the target under 1, or whatever the case may be. So looking at 1:31 to 36, 1 whatever. Right? So retail traders would have lost this trade because we broke this trend line, and we got that retest and they would say hi, change because the trend line is broken. No, once the market is still creating lower highs in this downtrend, you're still in that downtrend, right? even if the trend line is broken. So this is why I say support and resistance, and retail trading is really probabilistic than facts, right? However, if you understand support and resistance to a level, and you understand the structure, you can be profitable from it, right? Alright, so look at this. Look at this next example, right? So this is a double top pattern. So you would have gotten your entry, or the retail trade would have gotten an entry here and extended. Maybe they got a target on the 4 or whatever the case, maybe or the 1 over the time frame and extend all the way down. But look at this. Before you could actually go like a third in profit, the market came back up aggressively, take you out and then push the downside, right? Smart money traders know that there is liquidity above this equal high, right? And we'd actually wait for this equal high to be cleared before we take an entry. And even if you miss this entry, say over here. So this is a lot of equal highs or chipotle tops, whatever the case may be. You guys would have entered maybe this beer engulfing pattern right here. Right here on the close of that beer candle and stop loss above, right? So when you guys see this huge push to the downside, your stop loss, maybe in profit, maybe here, because you're saying the market is not coming back, right? But smart money trader now, our entry would be right here because this is an auto block, right? And if this is an auto block, then that means there are unaccounted orders left right here. So our entry would be here in stop loss above all the blocks, which is 2.2 pips stop loss. And then we have extended to our target 1:40, 1:45. Maybe if you hold this. But if you're a retailer trader, if you got your injured here, your stop loss would have to be above structure. And then you get a 1:7 when I get a 1:40 something. So the risk to reward is always greater once you know exactly where to enter, once you get those precision entries, right? And that is what smart money trading is all about, where you can get those precise entries, right? So that is why it is better to trade smart money strategy, because it is more facts than probability, right? And make sure you're using a broker with a low spread. This is actually very important because